Morning. We are Sell It Sister, and we are here today on location at Wilhelm Mortgage. And this is part 2 of 2. And if you were with us a couple weeks ago, we talked about buying and holding versus flipping in this crazy real estate market that we're in here in Omaha and the investment market. In part 2, we're going to discuss investing, the financial part, and we have our mortgage consultant guru with us today, Jeremy Wilhelm. Jeremy's been at this a long time. He is a trusted friend, a business colleague. We trust our clients and our own personal business to him. I'm going to let Jeremy share a little bit of his background.
Thank you so much. Jeremy Wilhelm, it is nice to be on Sell It Sista. So thank you for inviting me. This is going to be a fun time. So we're going to talk about money, investing, what's the current market and trends like. I've been in the mortgage business 21 years now. I started my own company 2 weeks before the pandemic, so it was perfect timing. I figured go in and go, do it all. So.
Yep. And you made it.
We made it. Yeah, we made
it.
Yeah, you know what? That's right. So we are very blessed. The community's been so good to us. So we have a lot to be thankful for sure. But the one thing that we all love doing is educating, and especially educating you guys that are listening. One thing I do find very interesting is kind of what the market's been doing here in Omaha. We hear about it all the time in like the Las Vegas, California, Florida markets. We're feeling it right now. So it's been very, very tough for clients to get homes. So we are trying to come up with ways to, use our ingenuity and get our clients the best investment, and that is in real estate. So I'm excited to be here. I'm excited to share some programs that we've built and catered around the Sell It Sista program. So
we're super happy to have you.
Yes.
Why don't you give just kind of an overview? I mean, I know Megan and Carri, I've not been that busy the last couple of weeks, but Megan and Carri will tell you like how stupid crazy the market has been.
Yep. Well, I mean, it's just like, buyers or sellers, we're still getting multiple offers, things like that. And Jeremy, I'm sure you probably see on the buy side, how many of your people are probably calling you constantly for updated pre-approval letters and, just trying to position themselves in the best way possible to try to be competitive in an offer situation. And I mean, I'm sure you're hearing from clients a lot more often needing more, how do I do this? How do I position myself?
Well, I just had one last night, and it's crazy that I say this, and you guys will probably all understand what I say when I meant that I was excited that a property came in only 10 grand less than asking price. Is that messed up to say?
It is messed up to say.
We never used to get excited when things came in low, but this house, my client had a offer that he would pay up to $13,000 if it didn't appraise.
Okay.
I looked at comps. I was concerned about it appraising. The appraiser, it was a VA deal, and the appraiser asked for Tidewater, which those of you realtors that have been in it for a long time know what that is. That means basically for all of you that are military or know someone in the military, when we do an appraisal and the appraiser cannot come up with the value, they invoke Tidewater, which means they depend on these lovely ladies or whoever the agents are involved in that transaction to come up with comps to justify that sales price.
Right.
The agent did a phenomenal job, wrote a whole letter of explanation. Obviously, we talk about the supply and demand. Yep. And the appraisal, I was worried about it coming 20, 30 grand. I never thought I'd be excited when it comes in 10. So my client, believe it or not, was also excited. So he gave us the green light this morning that he is going to pay the extra 10 because price point $275. We all know how hard and difficult it is in that price point. So, we are seeing some appraisal issues, but a lot of times you guys are already writing in that, the client will cover the difference.
Yep.
And correct me, or my ignorance here, I do several VA deals a year, but typically VA will let you pay more than asking?
Yes.
Okay.
Yes. And the realtor was asking me that same question, as long as the client's comfortable with it.
Okay.
And you
also,
know what?
the client has to have the money for
I was just going to say, it's not that
off.
often that a VA client has an
money.
Extra 10 to 12 grand.
Right.
This guy was already putting 5% down to get the lower VA funding fee.
Okay.
So in this case, he did, first and foremost, we don't want you to pay an extra 10 grand.
No.
I was
never.
not happy about it, but at the same point in time, to go back in the market and try to find a place, he's probably going to possibly run into the same thing, but possibly worse.
Correct.
Well, and
So-
also as the market just kind of continues to go, those price points may also continuously get pushed up. So it's like,
Correct.
if you think about it, you try to get into a house and, you know, it costs $10,000 more, which is still a significant amount. It could, in the long run, still cost you more.
Absolutely. And for him, does 10 grand pay for the blood, sweat, and tears they've
Correct.
already put in?
Right.
He's been looking for 6 months and
Right.
he's lost 13 offers.
Right.
So,
So at this point, it's just get in a home and start my life.
Let's move on.
Yeah, and just to educate our listeners today, can FHA and conventional buyers make up the difference in an appraisal
Yes.
shortage?
Yep,
Both.
all of them.
Okay,
Yep.
everybody
and,
can, okay.
And the funny thing is, too, is normally I would call you ladies that would be involved, and we would say, you know what, we're going to renegotiate the sales price
Yeah,
with the
but
seller.
That's what we would have
Do you
done
know
3 years ago.
Do you know what
Yeah.
the seller told us?
Right.
Yeah, pound sand.
Exactly.
So I'm gonna
Moving on.
I'm gonna
I
just
got-
relist it.
Yep.
So it's one of those catch-22s. I mean, we all, you know, when I had the conversation, I mean, yeah, the seller could maybe split. He might, yeah.
Right.
But the chances very slim.
Right.
Yeah.
And that's kind of what ended up happening.
Perfect.
Do you want
Thanks
to
for
talk to
listening.
us? Yeah. Do you want to talk to us a little bit about rates and kind of the state of the market right
Yeah,
now?
I'd love to. So there's been a lot of, first and foremost, I always say this, for those of you that are listening, think about it this way. We've got stock market, treasuries, and we've got bonds, mortgage-backed securities. So when the stock market goes up, 9 times out of 10, you're seeing money flow from bonds invested in stocks. When stocks rise, bonds go down, long-term interest rates go up.
Okay.
So I hate saying this when I get a pre-approval, but good news in the economy is not necessarily good for interest rates. And the word inflation is a very bad word for me. I don't want to hear inflation. When I hear inflation, I'm like, oh my God, the market's going to crash tomorrow.
There
Right.
goes rates, yeah.
Yeah, there goes rates. So we have seen, and that's the other thing, you know, we have clients that are missing out on homes, so we're doing estimates, and an estimate I did 2 weeks
Yeah.
ago versus now could be a quarter to a half point difference in interest rates.
Right.
If I showed you a graph, it'd be like riding on a roller coaster right now. So the best thing we can do is educate our clients each time that they go to write an offer. Rate-wise, to answer your question, I would say 2.875 to 3.25 is kind of where they've been hovering around.
And then you're
Not
talking
horrible.
30-year.
The 30
Talking 30-year.
Okay.
And still amazing.
Yeah,
Still amazing
exactly.
rates. And
My
the-
first house, I had 8% interest and was excited about
And you
that.
high-fived yourself.
Yeah, I'm like,
right?
whoa, way to go, 1998.
I was locking people in at 7.5%, thinking this is great.
Yeah.
I'm right there with you. So I mean, grand scheme of things, you know, a quarter to a half doesn't mean a lot in payment over time. Yes, but we are still at some of the lowest rates we've seen in
Right.
the history of monitoring this.
Right.
The one thing that I have seen, which is phenomenal, numbers came out yesterday, and in the last year we've seen a national average of 10.1% appreciation in homes.
Wow.
So
That's awesome.
that could mean a whole lot when you're talking about flipping and investment properties, that there is so much equity that's being built up in the country right now
Yep.
that we need to educate people to let them know that, hey, maybe they've got things they wanted to do to the house that they couldn't afford. There's options out there, so it's just sharing those options. So as far as rates are phenomenal. The VA and government rates are in the high 2s, so those are going to be always a little bit less than conventional rates. And then investment property rates, those are hovering between, I'd say, 4.5 to 5, depending upon the program.
Still good money.
Yeah.
Still great money, especially when you're talking about where rental income has gone. I mean,
Crazy.
to rent a property right now, I mean, the days I kind of cringe when I hear someone tell me I want to buy a house for $1,000 a month. I mean, that's not really a
It's not
that's
really
not really a thing anymore.
I mean,
unfortunately,
yeah.
unless you're putting 50% down.
Correct.
So those are really tough. But then try to find a decent place that you're going to rent for $1,000 a month.
Correct.
Right.
So it's one of those catch-22s.
Almost impossible, for
Right.
sure.
Yeah.
So let's kind of circle back to our topic, which is investing in real estate, because we know that real estate doesn't depreciate. And so our topic was, investing in the real estate market. And we had a lot of fun last week at Omahome's Flip House in Dundee, and they're getting started. We also talked about buying and holding. We've all kind of been down that road. And but this episode was really about how to do that, the financial piece. So, how do people get started? How do they qualify for an investment property? How do they get the money? What are the options?
No, I hear a lot. The one thing when I kind of rip the Band-Aid off because it is all about educating, and I don't ever want to sugarcoat anything with clients. But I've seen, especially in the last 2 years, an enormous amount of clients that never would have thought of owning an investment property. But I think between, HGTV, all these specials,
Right.
everybody wants to be an investor, but they don't realize what it actually takes.
Do you also think it's potentially they're seeing the market appreciate, so they're thinking they could potentially capitalize on some of that appreciation as well, or is it more kind of just...
Absolutely. I think a little bit of both.
Okay.
But I think that there's a lot of people that don't do enough due diligence, so they just want to jump into it, and that's
Right.
where I really appreciate you guys doing things like this, because it is all about making sure we educate you, because it's not an easy market in investing. There can be things that happen. Do you want to deal with a renter?
Right.
I mean, that's
Right.
that's the grand scheme of things.
It's also kind of one of those things where, residential, I feel like residential real estate is a very emotional purchase. And as an investor, you have to kind of be able to place that emotions on the side. It's a very business transaction, and I guess just be mentally prepared that when you go in, like, the house will not potentially be left as nice as what you gave it. And so it's like, do you have also the money set aside to replace the carpet, redo the paint, do things like that? And it's just kind of, it needs to be very business.
Absolutely. And that's where we look at, so to answer that question about what do people need to prepare for, really normal on investment properties is 20% down. So they would be needing that 20% down. There are some programs that I have where we don't need to have necessarily reserves. And reserves, to you guys out there listening, reserves mean after you put your down payment down, what do you have left should an emergency happen?
Right.
A lot of times on investment properties, they're looking for 6 months of PITI, or principal, interest, taxes, and insurance. So by them having that, that's protecting you. God forbid, as Megan just said, something were to happen, they've got ability to actually cover those costs or emergency purposes. Let's say a furnace goes out.
Mm-hmm. Yep.
I mean, that's real life stuff that can
Right.
happen any day. We're talking on the day my basement just flooded. So that
Nice.
happened 2 hours ago. So I'm dealing with it, and it's on my own house. So
Right,
what if,
right.
if I was a renter, I'd love it actually. 'Cause
Yeah,
I don't have
exactly.
to deal with it.
You just make one
So
call.
I'd
it's all
be
done.
calling you guys like, hey, who's going to fix this? So those are things that you got to think about.
Right.
Normally, as far as coming up with a down payment, because that's one of the biggest issues that our clients have, but that goes back to my statement of the appreciation we've had.
Mm-hmm.
So there's options of setting up home equity lines of credit on the primary residences. With all the appreciation we've seen, a lot of people don't even realize how much their homes are worth.
Right.
I've got some clients that thought their home was worth $250 and it's like $325 now.
Yeah.
So I think just educating people on valuations, that's a great opportunity, because you can do a home equity line of credit for minimal. I mean, I just set up a $70,000 line of credit for someone the other day, and if they pull that whole 70 out, it was like $282 a month. So
Which is also called a HELOC.
Yep,
Right.
exactly.
A lot of people don't realize that we throw that term around a lot.
Yeah, absolutely.
Now, is a HELOC also called a cash out?
Good question. So when I look at setting up investment properties where people want to tap into their equity, I look at two things. One, where's that first mortgage at? Because your first mortgage, you might be one of the ones that has not done the refinance yet. Refinance rates have been phenomenal over the last year. So we can do cash out refinances, meaning I take your first mortgage. So let's just say on a $100,000 property, you owe $50,000 on that property. On a cash out, you can go up to 80%. So I can go up to 80% or take out basically 30 grand of equity for that client. Now let's say we've got a client that might be a little bit higher on the first mortgage. You know what? I've got places that'll go all the way up to 95% on a HELOC.
Wow.
So that can be, a 15 to 20% possible HELOC that we could do. We always look at the cash flow though. So I look to see if the rate's phenomenal on the first and somewhat where they're at right now. I don't want to waste clients' money. So
Yep.
I love doing loans, but I like doing them that make sense
Right.
and that create cash flow. So the big thing would be, where's your first mortgage at and how much equity do we have? So
I also think one of the nice things with you being a mortgage broker is you have the ability to tap into various different investors with, so it's just kind of, you're not just a one size fits all.
No, there's quite a few places that I use over the years. If I can't find a house for it, it's probably going to be an issue, because I don't necessarily need to get, I mean, obviously we're in the business of making money, but at the same point in time, a happy client to me is going to send business over time. And so if I take care of them now and find a solution, it might not be something that I can do myself, but I know outlets in town, especially there's a couple local credit unions I use for a lot of home equity lines of credit that have phenomenal rates. And I shop those all about every quarter just to make sure, hey, these guys are in tune with where the market's at. There's some that I drop off and I don't use anymore just because the rates change.
Yeah.
And that's just kind of is what it is.
Okay.
So for people to qualify for an investment property, is that credit based? Is it, is the criteria the same for people to qualify as it is for a primary mortgage?
It's going to be a lot tougher to qualify on the investment property. So the credit score requirements are higher for the most part. But then there's some niche programs out there too. So niche programs, I'm not saying that they're necessarily at subprime all over again, but there are outlets where if that client doesn't fit in that box that Fannie and Freddie says is okay, and when I say Fannie and Freddie, that's Fannie Mae, Freddie Mac. So they dictate all the underwriting criteria for the loans that we do. When you hear banks, or I have people send me clients that are denied at big banks, and then I get it done, everybody wonders, how the heck was that possible? Well, each lender has their own specific guidelines that they use from Fannie Mae and Freddie Mac. However, the nice thing is there's some investors I have that have no credit overlays. So that means Fannie Mae might say, you know what, we're comfortable with a minimum credit score of 600. Bank A might say, you know what, we're not comfortable with that 600. We'd like to bump that up to 640. Those are called credit overlays.
Okay.
So credit overlays can be difficult with some lenders, especially ones that are, tight in their guidelines and they don't feel comfortable doing all that. So having the ability to have all the investors I have allows me to shop and know based on what client, hey, you know what, A, B, and C lender aren't going to be good for them right now, but lender D, really good. Now it might impact their rate a little bit, but grand scheme of things, if they're cash flowing on the rental property and things like that, it's one of those catch-22s. We can get you in the property, we can get your situation, whether it be credit or finances or debt to income. Let's get that up over time, and then we can always refinance into something more conventional. But if we can get you in now, continue to save money to get you into a better situation, plus create that rent flow and have appreciation on the property you just bought, it's kind of a win-win situation.
Do you see most people when they're looking to do rentals, are they doing like short-term financing? Are they doing 15-year mortgages? Are they doing 30-year mortgages?
That's a good question. Most of the time it's 30-year fixed.
It is?
Yeah, it's 30-year fixed.
Okay.
There are some places, like once you get to actually be like an investor, not meaning you've got more than multiple properties.
Yeah.
So you're sitting at that 3+ properties.
Right.
I think that's where I would say you've got a history of being an investor at that point. That's where we can really tweak things a little bit, and that's where it would be out of my cup of tea at that point, where I would say, you know what, this is more of a commercial loan.
Okay.
Now we're looking at a whole different ball game where we can do a whole line of credit and do a business line where, you know what, it's not a contingency that these ladies are putting on a contract for financing. You're writing a check and paying cash and using your line of credit. That's what I want most of my clients to get to at that point, because if we can get to a point where, let's say they've got 3-4 properties, they're paying 3-4 mortgages.
Right.
Guess what? We can take all that out, have it under one lien, and cross-collateralize everything, where you're making one payment, and it's, saving my clients hundreds, thousands of dollars over the life of the loan.
The one thing though with that too, you're not getting a 30-year fixed with it.
Correct.
But there's pros and cons and with, every side that you go, but I also feel like as you're acquiring more investment properties, you're probably going to want to start bundling them together a little bit, and then therefore you're not going to still be looking at that 30-year option.
Correct. Where most of my clients that are doing those business lines, quite honestly, they're taking all the money and they're applying it and they're paying that off, because guess what? They want to do round 3, 4, 5, 6.
Well, and
so they want to use that line and they want that line free.
Yeah, and I think that's what makes this market even tougher and more intense right now, is because you do have those good solid investors out there that have their line of credit, so they're actually able to offer cash on these properties.
Correct.
Whereas, let's just call them first-time home buyers, they just don't have the luxury of that, so they're losing out on these homes to the investors. And so, I mean, it's, you know, good thing, bad thing, however you want to kind of look at it, but it's one of those things that we're seeing that's kind of impacting this market right now too.
100%.
And just an education piece here, because I just had a transaction on a multiple offer listing, and we had a cash buyer, all 3 offers all over list price, but the cash buyer was $2,000 less than a FHA buyer. And so I had to educate my seller
I know where this is going.
on why,
You've heard this
you know,
before?
yeah. So, you know, FHA, yes, they're pre-approved for the loan, but they're putting 3% down. You know, we have a job risk, we have life circumstance risk. We're a cash buyer, there's no contingencies. We write that offer, it's a done deal.
Yeah.
We're just waiting for closing day to happen. So that's a hard thing with these first-time home buyers is cash is king. You know, there's no requirements, there's, you know, it's a for sure deal.
What offer did they go with?
They went with the cash, $2,000 less.
Yeah.
Because the security was
Yes.
worth it for them in the end.
Correct. And they can close in 2 weeks, where FHA right now is 40 days.
And are there repairs on the appraisal, and are there going to be
correct.
issues?
You're right.
Yeah.
Repairs, appraisal issues, you know, stuff like that. So it's educating people. So if you're wondering, wow, I'm pre-approved, why am I losing out? And it's because cash is king. It's always been that way, and it's going to stay that way right now.
I think so. Jeremy, real quick. So when they are doing and applying for these investment loans with you, like kind of what's some of your criteria? Are they looking at the, you know, what the rental rate's going to be, their return on investment? I mean, kind of what's some of the criteria parameters that you're seeing that these investors need to qualify for?
So to get the best interest rate, meaning to get lowest rate, if that's what your concern is, I want the lowest rate, then you got to obviously qualify for the best program. With that
You
being
also
said,
need a good credit score too.
absolutely. So I would be looking at 740 or higher as far as credit score goes. I'd be looking at anywhere between 20 to 25% down. The things we were talking about before we started the show, Fannie and Freddie came up with pretty large, substantial hits to interest rate recently for investment properties. So we have seen interest rates go up on investment properties, whether you have good credit or not. So those excellent credit borrowers are still going to pay for it in the interest rate with that new rate that came effective. So to get the best rate on an investment property, you're looking at 20 to 25% down. If you can do the 25, you're going to get a discount on interest rate. Okay. They're also looking for 6 months of those reserves, 45% debt to income. We can use 75% of the lease. So if they have if the property's already rented, we can use 75% of that lease payment to offset what that mortgage payment's going to be, which is huge. And also on top of that, you can get a lease if it isn't leased. So if you're buying a property that used to be someone's primary or it wasn't rented, and you find a lease and get the lease put together before closing, we can do that same thing too. And then they would be looking at that 6-month reserves. And then you let me know when you'd like me to talk about that Sell at Sista's promo too, because that program kind of trumps all what we've been talking about a little bit.
I'd
So
say,
if we can dive into that.
Yeah,
So there is a program that we were catering specifically for these ladies' clients and any of you out there listening. There is a new program that we rolled out as early as last week. What that is it's phenomenal. So a lot of times we're talking about the lowest rate, the best way to qualify. Let's say that you still want to get into investing, but you don't have that 740 credit score, or your debt to income's high, but you are comfortable still buying the investment property because you see the writing on the wall that it can cash flow. You've got your reserves, so you're comfortable with that. You can put as little as 20% down. I don't verify any employment. There are no DTI restrictions, and when I say DTI, that's your debt to income. So we don't even look at debt to income.
Okay.
So I put no employment on there. Interest rate on that is between 4.6 to 4.8%, and that is on a 30-year fixed.
Not bad.
And that could change also.
That changes daily.
Yeah.
Right.
That changes daily, but right now it's phenomenal. So the huge part of that is if you're putting 20% down, all we need to confirm and verify is that your rent is going to cover the mortgage payment.
Okay.
That's it.
Wow.
Now we don't even.
When you say mortgage payment, are they required to have the taxes and insurance in it?
Yes.
Okay.
And then you also brought me up, you do have to have your own primary residence. So you can't be renting a property right now and then wanting to buy an investment property. You have to have your own primary residence right now. But that client can now put 20% down. I don't show any employment. And when we do the appraisal, we ask for what they call a 1007. And for those of you that know what that is, that's basically a rent appraiser where the appraisal will come up with a marketable rent for the area. If that covers the mortgage payment, that's it. All we need to show is that they have 6 months of principal and interest, taxes, and insurance on their primary property and on the rental, and that's it.
But you're not securing the primary property on this loan, are you?
No, absolutely
You just
not.
want proof that they're a good payer.
We'll show it on the credit report when we pull credit, and
Okay.
obviously with their mortgage statement.
Right.
But other than that, it's a phenomenal loan.
That's
just
outstanding.
The door for a lot of people who maybe couldn't get in the game.
Absolutely. And then to even top that off, you got an extra 10%. The rate does lower, but not only does it lower, we do not need to get that rent verification anymore. So the 1007 appraisal is going to be a lot more expensive than just a regular appraisal. However, grand scheme of things, if you don't want to deal with a lease and you know that you've got work to do on the property, maybe you're going to be doing a ton of work and turning it from a $1,000 a month rental to a $1,600 a month rental. You don't want to deal with where the market rent is, but you've got that 30% down. That's a win-win situation.
Well, it could also be, helpful. Like if you're brand new into investments, maybe you kind of, you may have an idea of what the rental market is, but again, having kind of an appraiser do that little bit of research
that
too
helps.
doesn't help, doesn't hurt.
Absolutely.
Well, yeah, and going back to my flip house on the financing, it's my first time, as you all know, and it's a big learning experience. I never thought about relocating HVAC system, and that was not even in my budget. I'm like, whoa, learn something new. But when, we just knew...
How big is the miscellaneous budget?
Well, I can tell you now we're not painting the outside. Adjustments have been made.
Yes.
But anyway, when the bank did the appraisal on the house, I assumed they were just doing it for what we were buying it for because we're using our own cash to make the improvements. But they did it on the end. We had to show them what we were doing, talk about materials, what we're adding. And they did a projected appraisal on when the house is totally complete. Mm-hmm. And it was actually $21,000 higher than we thought we were going to list it at. So now I'm like, oh, we're in the glory game here. Right. But it surprised me how the process works. Mm-hmm. Because again, I've wanted to do it for a while. I've redone several of my own homes, and it's just, this is, Chip and Joanna Gaines. It's so easy.
Right.
And it's true, demo day is the most fun day I've had so far in the 30 days I've owned the house. But it's
also the most stress relief.
Exactly.
Have you guys heard about this 70% rule for flipping? So I was doing my research for this episode, and we've all done some investing, and of course Carri's doing this flip right now. So the 70% rule says that an investor should pay no more than 70% of the after repair value, which is the ARV of a property minus the repairs needed. So I thought that was really interesting because the investors that I work with, I always tell them, you got to have a 14% return. And I know a lot of people think 10% return, but this 70% rule, if you look it up, it really is everywhere. And if we are on, our RPR, which is the Realtor Resource, I see that ARV all the time, and I've never known what it meant, but it's the after value repair. Mm-hmm. So,
and I think too, if you want to be an investor, you need to be dialed into what the market's doing, because the market can eat you alive.
Yeah.
And
absolutely.
So, you just need to know what's going on and be prepared for the ebbs and flows of it.
Absolutely. 100%.
So again, Jeremy, thank you so
You're welcome.
much.
This
Your
was awesome.
expertise
Yes.
was awesome. Again, listeners, this promo that Wilhelm Mortgage is offering is an amazing value if you're ready to get your feet wet and you're brave in this market. Please give Jeremy a call. On our next episode, we're going to talk about this multiple offer market, how you can get an edge, and we have a lot of expertise at the table for multiple offers in this crazy market. We're going to tell you how you can keep your sanity, how you can find an agent to match your needs, and some of the cutting edge strategies to win that offer.
Nice. Well, just remember, today is what you make it, and we're going to make it outstanding.
We are Sell It Sister.
Love it.
Thank you.
Thank you.